Started, guys, and let's go. So we're going to go straight into the trading tips, right? So this is all about where do you place your stop loss. Now, guys, put your favorite pair in the comment box for me. So which pair are you guys all looking at right now? And I'm going to tell you 3 tips on what I look out for where I place trading tips. Now, I'm not your 8-figure trader. That is Ads. So Ads will be taking over and telling you guys where he places his trades. Now, we do trade a little bit differently. So it's really good that you take 2 kind of perspectives on placing your stop loss. So let's see where you guys go. Okay, so GU and GN. Okay, let's go. So GU and GN, right? So you guys should all know TradingView. This is just very basic, to be honest. So let's start with GN, right? I don't know where GN is going, so everyone can see my screen. But 1 and 2 can see my screen, okay? And I'm going to quickly go straight into it because sometimes it's really important to know where you place your stop loss. Now, I can clearly see that was a very good sell, right? So you guys can see, perfect. So we've got NAS 100 as well. Okay, cool. So guys, my first thing of anything, so write this down, my first thing of anything in trading is I always do top-down analysis. Now, what that is, guys, is you go up from the highest time frame all the way to the lowest. Now, that has to happen for me regardless. I don't like trading any kind of weeks without knowing how the weeks have gone, okay? Now, they do say if you're trading intraday, then you only need to look past 5 days. And if you're doing it a bit more like swing trading, you can go in the weeks. But I like to put the weekly analysis regardless because sometimes the bigger picture is what you need, okay? So if you're, say, for instance, looking at GN, so let's just say I was looking on the weekly time frame on GN. Guys, can you see some clear zones or not? Can you see some clear zones or not? Actually, this will be a good sell soon. So guys, can you see where I put I'm not going to trade this, guys. This is not a signal, by the way. What I would do is first you mark out your zones. Now, that's one thing that we should already know, guys. You should be covering that in your trading platform, whichever one you're using, you should know about your zones. But this is a stop loss training, right? So we want to know about stop loss. What do I look out for? So write these notes down, guys. Number 1 thing that I look out for is actually the market volatility, right? So write the volatility, yeah. Write that down, guys. Market volatility. Now, what this means is there's no point in trading. So say, for instance, we want to trade on the 1 hour, right? I think a lot of people trade on the 1 hour. I don't trade on the 1 hour that much anymore. But say we're trading on the 1 hour. If you guys want to know, is there volatility, let's just change this to actual size. Is you want to see how many pips it moves up and down. Now, if you guys are quite new into trading and this scares you, all you want to look out for is kind of where's all the wicks going, and is there more wicks than body? That's what I like to look out for. Is there more wicks than body? Now, Robert, are you trading GN? Because that is slow. This is a really slow pair. I wouldn't trade slow pairs like this, but my team like to trade slow pairs like this. But as you guys can see, there's not much movement going on, so you don't really need a huge stop loss. Now, the bigger the stop loss, the more the risk, right? So when I say check for volatility, you want to see how many pips are kind of going up and down. So I don't know how you want to say that in your kind of way, but you want to say how many pips, or let's make it easy. How big are the candles, right? If you want to make it super easy, you want to just look at the candles and see how big they are. Like if there's a huge moves going ahead, right, you can see that there's going to be a lot of movement. Now here, guys, in the last day, what's the date today? The date is the 28th, right? No, 27th. Okay, cool, because we're in the next day. Okay, so if we were looking at this one, guys, on the 27th, not a lot really has gone on. So you can mark out the top of it if you want. Let's do it on the daily. This is the easiest way. Like if you guys look this day, right, and I think you guys are in the next day, so if you're from Australia and all that, you're in the next day. But if you guys look, this kind of move was nothing, right? So let's clear this screen off. you can see that nothing really much happened here. So you don't really need to worry about having 100 pip stop loss when there's only been like 50 pips being moved, right? So one of the things I look out for at the start is it really volatile pair? Now, if we compare, so you probably, okay, let's compare this move, this pair has barely moved. Let's look at like BTC, right? So let's look at something that moves a lot. Now, if you guys look in today alone, I mean, we've read articles, it's been 5%. In today alone, the amount of pips that have moved are crazy. So if you had something that's moved like 500 pips in one day, having a 10 pip stop loss is kind of asking for trouble. It's too small. So you need to judge your stop loss on the pair itself. That's the first tip that I would give you. Like if you are dealing with a Robert kind of pip, like thing that he's doing, and it only moves like 100 pips, then you can be okay with having a tighter stop loss. But if you're trying to trade Bitcoin and it's moving 500 pips and you're trying to have a 10 pip stop loss, that is asking for trouble. So first thing that you need to do is look at the volatility. Is it moving so much? Does that make sense, guys? Put any kind of thing in the feedback in the chat if that makes sense. I'll slow down if it doesn't. But that's the main thing I'm looking out for, right? I'm looking out for how wide the actual candles go. So that's the first thing. The second thing, guys, that you want to look out for is where is it at? Like, where is it at in the market? Now, as you guys can see, this was analysis from, I don't ever clear off really my analysis, by the way, but this analysis here was from October, which sounds about right because that's when I got ill pretty much. So guys, my analysis was just before I got ill. That sounds just about right. So as you guys can see, this is what I was going to go for a buy. Now, if you want to know how would I have gone through for my stop loss, I'm going to change the color. My stop loss for this pair, now bear in mind, it's the daily right now, guys. So you got to be very, very careful with trading there. So you would want to move it up a little bit. What you want to do is I look out for the wicks, right? I look out for any wicks that haven't been filled. Now, if you look on my chart, you can see, let's move this around. I don't know why I'm analyzing Bitcoin, but let's go. If you guys can see right here, you can see there's a lot of movement that happens here, right? So if you wanted to have a stop loss, you've got to be really careful on what kind of position you want to go. You can either have a stop loss that big, which, by the way, isn't that bad considering the big day that I've had. But you can have a stop loss that goes just under. It's supposed to go under where it could go now, or even just par there. Like you could just literally put a stop loss right there if you wanted to, if you're going for the full swing. Now, this is what I'm saying, is how much you're willing to risk. So if you're not willing to risk that much, then you would halve your lot size, you will have a lower risk and a bigger stop loss. Or if you are having a higher like lot size, you need to have a tighter stop loss. Now you could actually have it here, like, to be honest, like you could have it right there if you wanted, and you have a really tight stop loss considering the gains. So you would always look at the movement. Now there's two ways of I actually trade. I wouldn't really necessarily just take this trade, even though I said I would like to buy here. My perfect situation would be buying here as well. But if that doesn't come about, then that doesn't come about. You have to understand that is really down to how much you're willing to risk. Does that make sense? Right? If that makes sense, where you place your stop loss is really based on the market structure that's already gone past. Right? Any questions, guys, before we move on to my next point? Any questions at all? Just want to make sure that I'm catching everything. Any questions? No? Okay, cool. So the next thing that I look at, guys, when I'm placing a stop loss is where does the market like to go? Now, what that means is if you look, and this, the easiest time frame to look at this, in my opinion, the easiest time frame I like to look at this is the daily, right? I like to look at where it likes to go. Because, guys, when you can decide where it likes to go, you can have a better entry point. Now, some people I know would have entered a bar, like a sell here, right? They would have entered like a sell here. Now, that's actually what I was intending, but I didn't actually enter that because you didn't see any kind of tension there. So you have to understand, where does the market want to push to? And if you go on the 50 minutes, you can see it even clearer if you're actually in the trade or about to enter the trade, right? So if you look at the perfect example here, this is a great trade that you can have for a second entry. So say you went for a buy, right? Let's say you went for a buy here, yeah? And you wanted to go for a buy and you cashed out TP1. So let's just say this is your TP1, right? Let's just say that was your TP1 right there. Now, if you wanted to, this is another thing I can do sometimes. If I wanted to, I can re-enter, right? Or you can have two already going. You could re-enter and go for the same buy near enough the same place. And then, right, your stop loss, if you calculate your pips, which Ads is going to show you, I'm not going to go through all the maths of that, but your stop loss would be just about near the entry that I would have had before, right? So there's your TP1, there's your re-entry, and you could have cashed in that move right there as well. So you have to look at where the market likes to go to. Now, that's pretty much like what I like to do. I know Ads has got a really good section coming up as well. So I'm going to pass it over to him, and then we're going to answer a few Q&As straight after. So if you guys are ready, put fire in the chat right now, because he's going to go over his section. So put fire in the chats, guys, for an 8-figure trader, right? 8-figure trader right now, right? Let's go. And Ads, I'm going to make you host. And then we can listen to someone who's trading millions. Am I allowed to say that? I don't think I'm allowed to say that. But yeah, he's trading millions. So take notes, guys. Take notes right now. Go on, Ads, let's go. Change host.
Thank you so much for that, Tyrene. I hope everybody did take some notes from that away with them as well, because every single thing she mentioned is so helpful when it comes down to especially technical trading. So yeah, I'm going to go into a little bit more depth on 3 points that I use to measure risk. So what I'm going to do is quickly share my screen, and we're going to go onto a chart. Sorry about that. Yeah, wicked. Right. So this is gold, but let me go on to a clean chart. So Euro GBP. Apologies about the internet. We're draining it right now. All right, Euro GBP. So let me just clear everything right off here. First of all, remove. All right, so Euro GBP, we're looking at this on the 4-hour time frame. Now, the first thing I take a look at is strategy. Yeah, this is how I decide to measure my stop loss and where to place it. So depending on what strategy you're going for, if you're, let's talk about simple strategy first of all. Basic support and resistance. Yeah, I'll place some support and resistances. So obviously there is some sort of resistance up here. There was multiple wicks. There's a minor support right down here. As you can see, we have had multiple wicks around this area, but it's not a major one. So let's change the color of that to orange. White ones are the major ones. Yeah. Next, we see a bit of resistance up here. So this one will be white. Now, depending on what strategy you're using, like I said, if you're just using a simple strategy like support and resistance, your buy should obviously be at the support or the resistance. Your take profit should be at the next support or resistance, and your stop loss should be at the previous support and resistance. Now, that's not a very large stop loss. That's about 35 pips. And if you're cutting your lot size down in half, you will only be losing, about 1.7% of your account. Yeah. So if you're going by 0.01 per £100, then you'll be losing about 3.5% of your account. Yeah. So always look at the percentage of your account as well at the same time. Now, I've got a certain rule. I can only lose a maximum of about 1% per day. Yeah. As soon as I've hit that loss for the day, I stop. Yeah. What I see is some people making like 12% losses in a day. That is absolutely absurd. Yeah. That is, if you're making more than 5% loss in a whole day, you're definitely doing something wrong. Yeah, you're either over leveraging or you're over trading. It means, you know, your lot sizes are too high, which is over leveraging, or over trading means you've taken too many trades for that day, and you've taken, you know, anything above 5% loss in a whole day. That is a very large loss. So 0.01 per £100 would only lose you about 3.5% on this. So that means on this very trade, we have to use 0.01 per £200, which means we have to cut our lot size down even further in half. Therefore, we are only losing about 1.7% of our accounts. Now, one thing a lot of people only do is only look at how much they're going to gain. Yeah, but they never look at how much they're going to lose. If you concentrate more on the losses, the wins will come by themselves. Does that make sense? Yeah. And still, if you still hit this take profit, even using this small lot size of 0.01 per £200, you will still clear a good 5% on this very trade. Yeah. Does that make sense so far? Now, there's other strategies that I use as well, like Fibonacci. So you guys are lucky to be on here because you'll see my custom Fibonacci setups, which already has the stop losses in place. Yeah. So as we can see, the 62 fib lines up directly with this support area, or this support line, this orange support line, which isn't very strong support, but you know, we have two confirmations on this very trade, which is the 62 fib lines up, and also the support area is in place as well. So both of these line up. There's two confirmations. Plus, a third confirmation I would see on this as well is the candlestick is currently, you know, very, very weak. There's weakness in bearish momentum. So there's our three confirmations. Now, how would we end up placing this very trade if we were to buy this right now? So my custom Fibonacci setups or setup has already got a take profit and a stop loss on it. Yeah. Now this stop loss is larger than the previous one at 46 pips. So that means we must be using about 0.01 per £300 for this one. Yeah. Meaning if we were to take this loss, we would only be losing about 1.5% of our account. Yeah. Whereas if we were winning this, we would be winning about 3% of our accounts, which is greater than a very large loss. So always look at your risk to reward ratios at all time. And on this one, this is about a 1-to-2 risk to reward ratio. Remember, risk to reward ratios are very, very important. Yeah. Now, just because you guys are on here, you can actually take a quick picture of this Fibonacci setup. In fact, I'll put this in a blank area. So you guys can actually take a quick picture of this, and or you can write these numbers down. So the numbers I only use for fibs are 62. So I changed my 61.8 to 62. I changed my 78.6 to 79, meaning that we get those slightly better entries. Those extra 2 pips can make a massive difference. And then I add a middle zone, which is the 70, which I also call the sweet spot, because sometimes you get spiking to the 70 zone and then it drops. Yeah. Now I've taken out all the other fib zones, which is the 50%, the 23.6, the 38.2. Taken all of those out. I use fibs every single day, and they are very, very helpful, especially on GBP pairs. So if you are trading GBP pairs, fibs really, really are very, very helpful. Now, the 2 stop losses I have is 1.1 and 1.22. I don't ever go for 1.22. 1.1 is enough for me, because if price comes back to 1, yeah, it's more than likely, you know, you're kind of on the wrong side of the markets. But if you see how small these stop losses are, they're not that small. Sorry, they're not that large. So 15 pips and 21 pips. Yeah, or depending on where you draw it, you know, the previous one we saw 46 pips. I reckon the 1.22 would have been about 55. So we don't really want to be losing 55 pips. Yeah, 46 pips is a good enough hit to take anyway, and it's affordable. Next, I have 3 take profit areas as well. So minus 0.27 is one take profit area. I usually just aim for this, or once my trade is in a decent amount of profit and I'm happy for the day, I close it early. Yeah. If you want to follow this very strategy, it's very, very helpful. Minus 0.27 is TP1. Minus 0.62 is TP2, and minus 1.27 is TP3. So I'll quickly show this to you guys, and then we'll move on to point number 2. So where can we see some fib setups? All right, so we can actually see a fib zone. Let's just draw a normal high to low. Yeah, normal high to low from here to here. There we have our high to low, or low to high, or high to low, should I say. And we're going to end up placing a trade on this very area as well. So let's say prices dropped. I'll actually do the replay tool because it's a bit hard to see. All right, replay tool's acting funny. Anyway, let's zoom in. So let's say price dropped here. We've got our new low, and prices start to come back. Let's just say we enter at the 70% fib zone now, yeah? So we enter a trade at the 70% fib zone, and we're aiming for just TP1. And we have our stop losses right up here at stop loss 1 area. So as we can see, price did end up going into and hitting our TP, but it did come very close to our stop loss, but just not close enough to actually hit it. Yeah, not close enough to actually hit it. It did come very close to our stop loss, but it went straight into profits after that. Now, what you could have done, which we've also mentioned yesterday, is if you moved your stop loss into break even, or every time it dropped further and further, you moved your stop loss more and more into profit. Let's say price came up here and dropped, yeah? At that point, as it starts dropping down here, I'll change this to red. So quickly change this to red, and that is our stop loss. So as you can see, as this price started drop and taking this major drop on the red candle right here, we would have slowly moved our stop loss down and down and down as it was dropping further and further. Eventually, it would have come back and hit the stop loss right there. So I'll take this out. Eventually, it would have come and hit the stop loss right there, but we would have still cleared a good 43 pips on that very trade, even though we were wrong. Yeah, how amazing is that? If you used 0.01 per 100 pounds, you would have cleared 4.3% on that very trade. Yeah, so it all depends also on what strategy you are using, and I've been absolutely transparent with you guys again and shown you the strategy that I use as well. Yeah, I use fibs every day. I don't use them all the time, but I do mark up fib zones every single day, and if it makes sense and lines up and I have, a few confirmations, then I will take that trade. But don't heavily and solely rely on fibs only. But even if you did, you should still be all right. But still, always have those extra 3 confirmations on your side, just to make sure you have minimized risk to the best of your ability. Now, point number 2. Let me just pull out my notes. So point number 2 is daily account loss, which I also just mentioned. Depending on your account size, my percentage loss for the day is only -1% loss. Yeah, for the whole day. Yeah, if I've exceeded this, or once I've hit this daily loss, I stop trading for the whole day. Even if there is a guaranteed setup coming my way in the next hour, I will move away from the chart. Don't worry, you will always get another chance to enter the markets at some point. Yeah, there will always be a setup ready for you. Yeah, next time you jump on the charts, do not worry. You will always find some kind of entry or setup to take some very, very good trades. Yeah, if you've got a small account, you can slightly increase this to about 2 to 3%. If you're just trading 100-300 pounds, then yeah, fair enough, you can afford to take a 2 to 3% loss for the day. That's not that much. It's only about £3. Yeah, I'm sure you could afford to take that loss, which is okay. But when you start increasing your account size above £1,000, then it starts to become unaffordable to take a very big loss in the day, especially anything above 5%, because a 5% loss on even something like £1,000 is £50 loss. Yeah, and a £50 loss is like half a day's wage for some people. Yeah, so you remember, you need to be growing gradually. Yeah, not growing rapidly and then dropping rapidly at the same time. If you go gradually, your losses will also only be small and gradual as well. Yeah, they won't be large losses at all. So account size is a very, very important thing. Now, let's go into a bit more maths once again. So if you're using 0.01 per 100 pounds, as this is always recommended, that means you can only afford to take a 10 pip loss for the day. Yeah, only a 10 pip loss for the day. Now, if you use 0.01 per 200 pounds, it means you can actually afford to take a 20 pip loss for the day. Yeah, even if you are losing 20 pips on that very trade, you are still under what you are losing for your whole day. Yeah, does that make sense? And you just have to calculate it based on, you know, what you're willing to lose for the day. Your max should be about 3 to 4% on a small account. On a larger account, it should be 1 to 2%. My actual loss used to be about 2%, but ever since I started, you know, managing funds, I had to decrease this as low as possible. And 1% seems, you know, pretty reasonable nowadays, especially on large accounts. Even 1% is not really affordable, but it can still take place. Yeah, because the amount of gains that come, you know, over that are so much better than the losses. If you can afford to take 1% loss, it means you should be looking for gains on each trade of about 3 to 4%. Yeah, and as you just saw on the trade that we just marked up, we would have gained about 3% on that trade, but lost about 1.5%. Yeah, so that is still a very decent amount to be gaining compared to how much we're losing. Does that make sense? That's a 1 to 2 risk to reward ratio. Now, the final thing, this is probably the most important, yeah, which a lot of people don't look at, and this is something that a lot of people push to the side. But you need to make sure, one of the major things that can be really, really risky in a trade is fundamentals. Yeah. Now you need to make sure you are always on top of your fundamentals. If fundamentals are going to come into play while you're in a trade, no matter how many confirmations you have, you will end up losing that trade. Now, if you're trading during high volatility, for instance, yeah, it means spread can increase. Now, let's just say we placed this sell right here, yeah, 27 pip sell, which means we should be having about a 15 pip stop loss, yeah. So 27 pip take profit, 15 pip stop loss. Now, during high impact news, so anything with red, spread increases, yeah, meaning your spread will increase about 2 to 3 pips on top of what it is right now. Yeah, because of the volatility and because of the liquidity able, you know, or available in the markets at this current moment of time. So you need to be extra aware of that, or I would say just stay away from markets if high volatility or high impact news is coming into play. Come out of your trades and move your stop loss to break even if you really have to, if you're already in some decent amount of profits, or just follow what we said yesterday and trail your stop loss. Yeah. So make sure you are always on top of fundamentals at all times. Now, I see people always getting spiked out with fundamentals, but if they were always keeping up with fundamentals, they would understand, yeah, and they would know when to stay away from the markets and they would avoid that happening again. Does that make sense? So fundamentals is a very, very, very important part of understanding risk as well, because anything can happen with fundamentals. Yeah. We can see sometimes 100 pip move within a few minutes, yeah, when it comes down to fundamentals. Now, if you're on the wrong side of the market and you don't even have a stop loss, you shouldn't even be doing that. Or if your stop loss is about 40 pips away, it may even spike 100 pips up and come straight back down into take profit, but it has just stopped you out. Yeah, just because only you have decided to enter that trade knowing that fundamentals are going to be in place during that time that you are in that trade. Does that make sense so far? Yeah. So fundamentals is a very, very important area of trading. Forex Factory is Forex Factory is something that shows times of every single fundamental that is going to take place. You can cut off the yellow ones, cut off the gray ones. As you can see here, I only keep an eye on high impact news. Plus, I do read data as well, but that's nothing to do with trade timing. Yeah. So trade timing is all based on what volatility is going to come into the market at what time. Now, let's just say another thing that you need to keep an eye on to do with trade timing, and not just fundamentals, is sessions. Yeah. So if you've placed a trade at, let's just say, UK time 12 p.m. And markets are starting to move slow, that is when the US liquidity comes into the markets. You may easily get spiked out, yeah, just because of high liquidity coming into the markets during market open time. Yeah, that could just easily be a quick spike out. Yeah, it doesn't mean, you know, you're wrong, because could still end up going your way. Does that make sense so far? Yeah. So market timings is a very important thing. Now, let me quickly write down, and I want you guys to take notes of this as well, what market timings you need to keep an eye on right now. Yeah. So the market timing, these are main times you need to keep an eye on right now. For UK time, Currently it is 8 a.m. So 8 a.m. is where high volatility and liquidity comes into the markets due to the London session. Next is 12 p.m. 12 p.m. This is NY. So all the Wall Street traders jump in at around that time. The next one you need to keep an eye on is 8 p.m. And that is Sydney. And the next one is midnight. Oops. Next one is midnight, and that is Tokyo. Yeah. So all of these times is where major volatility comes into the markets. Let me just increase this in size so you guys are easily able to read it. So write this down or take a picture, but these are the 4 times you either need to stay away from, or if you know how to trade volatility, you can jump into markets during this time. Yeah. So if you're placing trades around this time, you need to be aware of high volatility and liquidity being pumped into the market, which could easily stop you out on the wrong side. It doesn't mean you're wrong. Yeah, it doesn't mean your analysis is wrong. It just means you haven't taken into consideration the market liquidity that will come into play every single day. And this happens every day without fail. Yeah. In fact, you know what? You could be on the right side of things. Yeah. You could be on the right side of things. And let's just say you placed a sell on, let's just say, Euro USD. Yeah, you placed a sell on Euro USD around 11 a.m. for instance, and then New York volatility comes into the markets and it pushes your trade down, yeah, even further because of the heavy liquidity. Sometimes it can actually help you and be in your favor, but at the same time, you don't want to take chances. If you know liquidity and markets are opening for London, New York, Sydney, or Tokyo during these times, you should be well aware and you should be managing your risk to the best of your ability. So if you place the trade once again at 11 and liquidity comes in at 12, you should be moving your stop loss to break even at least, especially if you are in profit, or you should be keeping a very close eye on your trade at all times. Now, one of the major things I'm going to write on the screen once again is never trade without a stop loss, ever. We mentioned this yesterday, but we're going to keep mentioning this every single day. If you are trading without a stop loss, it means you are risking your whole account. Yeah, pretty much. You are ready to risk every single penny in your whole account right now. Yeah, and I'm sure you don't want to throw away money to a broker just like that. If that's the case, I'll send you my bank details. You can send it to me instead. Yeah, but look, never trade without a stop loss, because a stop loss is your limit to how much you are going to lose every single day or every single trade, for instance. Now, if you've got a set limit, like mine is 1%, yours might be slightly more, 2, 3, 4%. Yeah, this stop loss will help you calculate that. This stop loss will help you every single part of the way in managing your risk in whatever trade you are entering, or how much you are going to lose on per trade or per day. Yeah. So once again, let's run through all and everything that we just mentioned. So the first point was strategy. Oops. So strategy was the first thing you need to take into consideration, yeah, when it comes down to managing your risk. What strategy are you using? Yeah, does it make sense? Sometimes I look at the harmonic scanner and I see like a 50 to 60 pip stop loss. I will never enter those trades because it doesn't make sense, yeah, for me to be losing about 2.5% when my max daily loss is only like 1%. Yeah, it can make sense if I cut down the lot sizes, but it just means, you know what, let's just wait for a trade with a lot less risk and a lot smaller stop loss. And if you see a trade with 50 pip stop loss, I would personally suggest not taking that trade at all. Yeah, the reason why is because if you're 50 pips wrong, you're you could be changing your direction and going the other way instead. If you're in a sell and it jumps up by 50 pips on towards the upside, you could have gone the other way on that trade. So 50 pips stop loss is a bit silly. Yeah, I would not suggest. Well, that's just how I prefer trading. Some people prefer using 50 pip stop losses. That's completely up to you. However, it all depends on your strategy. Yeah. If I'm using the fib strategy, I will place my stop loss exactly where the fib strategy tells me to place it, on the 1.1 or the 1.22 or the 1.12, I think it was. Yeah, let's just confirm. So it was 1.22. Yeah. However, I will hardly ever use the 1.22. I will only go for the 1.1, and it all depends on your strategy. Once again, another strategy is support and resistance. If you're buying at support, it means your stop loss should be at the previous support and your take profit should be at the next resistance. Yeah. Next point was daily account loss. So look, you don't have to worry if you're not good at maths. You know, every single one of us has a calculator on our phones. So you don't have to worry about these things. Yeah. If you know, so yeah, daily account loss is the second one, and the third one is fundamentals. So yeah, fundamentals, I spelled that wrong. Always make sure you are prepared for any kind of fundamentals. Oh yeah, and also market timing. Any kind of fundamentals that could potentially hit your stop loss or take your trade into the wrong direction. And market timing, you need to understand that volatility comes in at those 4 times every single day. Yeah. So volatility comes in at 8 a.m., 12 p.m., 8 p.m., and 12 a.m. Yeah. Those are the main 4 times you need to be, making sure that you are on the right side of the market, or you need to limit your stop loss as small as possible during those times. And lastly, always keep an eye on fundamentals at all times. Now, just before we finish it off, I'm going to quickly hand it back to Tyreen. I hope this has been very enjoyable for all of you. And yeah, that's it. Next one will be tomorrow.
Thank you so much, Ads. Guys, can you drop some fire in the chats for the amount of value that was dropped in this training today? We do apologize for the connection. Like, I think because everyone's working from home right now, the connection is insane. So we have to be very, very patient on that. But guys, drop some fire in the chat for the amount of value dropped. We're so grateful, guys. What we recommend, if you have enjoyed this training, we want you to go back to the chat where you were invited to this and say thank you right now. Because I feel like there needs to be an appreciation for the amount of people that give their time up for free. This is all companies, all we don't even know half your names, but we want to give as much back. So guys, when you found this link, say thank you, give thanks, because we will keep giving that link to the group that gives as much thank you, right? So if you say thank you, we're going to drop the link in that every single day. If you guys don't say thank you, then we're not going to drop the link there every day, okay? So guys, thank you so much for jumping on this training. We have another one tomorrow, and it's going to be a fun one tomorrow. So make sure you do come same time tomorrow. And yeah, thank you so much, guys. If you want to know, this will be uploaded onto YouTube so you can share it with your teams. But other than that, thank you so much, guys. Have an amazing evening, a day. And hopefully you guys will use your stop loss tomorrow. Take care, guys. Bye.